not satisfied, let us know and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We start today talking about soybeans going back to 1997, and I'm doing this because I remember this day like it was yesterday. It was early June of 1997, and Mark Douglas and I were here in the office working, and Mark had a couple of bond traders in that were his clients. They had come to Tucson to visit him and also to stop by the office here. And Mark and I shared an office, and so he was working with them, and I happened to be in a soybean position. And as you can see, I marked that key time right there. Now, this is a monthly chart because I'm just trying to tell you the story because we're seeing similar things happening today. Now, on that day, the soybean report was relatively bullish, but the market didn't react to it very much, and I had sold them right after the open, and the market went all the way down to almost hit limit down. And I was feeling really good. Here I had a 30-cent profit in the treasury, in the soybeans. I was feeling pretty good. I didn't want to interfere with Mark and his friends that were visiting. And so I said, Mark, I'm going to go to the movies. And there were two movies playing that day. One was Dante's Peak with Pierce Brosnan about a volcano. And the second one was Volcano with Tommy Lee Jones. And so I went to see a double feature at the usual little theater that I usually hang out at. And I didn't even bother, because I had such a big profit in the soybeans, I didn't even bother to put a stop in on the soybeans. So I figured, I must have been okay. Well, when I had left the office, it was around, must have been, I don't know, I don't remember the exact, it was the early movie because that's when I like to go. And anyway, they'd come off limit, but they were still down about 20 cents. And so I went to the movies and spent the whole afternoon there at the movies like I usually do when I wanted to get away. And what happened was, you'll notice that key time there. What happened that day was the market went limit down. It would lock limit for a while. Then it came off a limit. Then it went all the way back, folks. And believe it or not, it made a new high on the move by about 5 cents. And I'm short, but I don't see this rally because we don't have cell phones or anything like that. So I didn't see this until must have been 2 or 3 o'clock in the afternoon, long after the beans had closed. And then they had gone up there, and then they went all the way back down and went back limit down again. And so I'm thinking, boy, I'm pretty smart. When I looked at that chart, and I saw that thing had rallied 42 cents off the bottom, I was shocked, happy, but shocked. I just couldn't believe that it could do that, and that can happen, folks. And I'm gonna give you what I think is my 2 cents worth of how this stuff can happen. Remember, you've got to realize that there are 3 firms out there that control 60% of all the stock trading goes on: BlackRock, Vanguard, and State Street. They control 60%. If you don't believe it, look up the statistics yourself. They basically own that much of those stocks that are out there. But here's what we were looking at last night, and I will bring this up to you very clearly because those of you that follow 24/7, you do these trades along with me, and sometimes they work great, sometimes they don't. But here's what we were looking at yesterday. If you remember, we had that big move. There was a 382 retracement right here. We went short, and the market went all the way down here. This was right after the close, and I saw that, and then I saw that the market had rallied up to the 382, and then it hit it again. This is when I sent out an alert, and I said, if this gets above this level, don't be short. Cover your short position. We sold it at 38.61, and we got out of it here. Folks, this was a $5,000 move. Fortunately, we still made a couple of grand off of it, but we left well over $3,000 on the table. But look what happened last night. It comes right down to the 61% retracement, to the exact tick. And then it took off, and that's when the real move started, was when the market, started to open this morning. Now, at the same time that was happening, remember, I'm watching the Dow Jones, and I'm watching the NASDAQ, and I'm watching the E-mini S&P. So as I was watching this last night, and I wanted to bring this up to learn from these things, hopefully. Anyway, this is the NASDAQ chart. And as you can see here, the NASDAQ went right up to the 382 retracement, okay, all the way back from that high, way back here. That was the January high, boys and girls. Wait, that was the August high. That was the August high. We went right up to within a couple of points of the exact number, and then it sold off quite a bit. And then, I can't stay up all night, and I was tired last night. So around 9:30, I went to bed, and I saw the S&P was still down, the NASDAQ was still down, but it wasn't down. It was far off the bottom. It was more than 40 handles off the bottom. And I said, well, I got to give it a little bit of room because, these numbers are really important. So I said, I'll just put the stop above that 382, because if we get above there, there's something wrong, because the market was not responding to bad news. The news on Apple was really bad. And let me show you what happened to Apple, because I was watching Apple because I wanted to see, what was going on with that particular stock, because, it's held by, almost everyone. I've never owned any of it, but here's the Apple stock. You'll see we were up here. The report came out. We all the way down to just a little above the 78% retracement last night, down around that 38 level, 37.5, 38, and then it started to move. And then once we cleared that 382 here and started to go higher, that's when the market really kicked in. All of them, S&P, NASDAQ, and Dow E-mini, all of them started to go. Now, is this the beginning of a new bull market run? No, I don't believe it is. I believe that we're making a top in here. But when you see these numbers hit and the market cannot respond to negative news, that is telling you that there is something seriously wrong, folks. Of all the things I've ever done in my commodity trading career was to respect that. And I can tell you, I've told you many of the times that this has happened to me, over the years. I mean, my big life-changing one was in 76 when I was long, the soybeans, and they said the only soybeans that are going to be available is going to be in the Smithsonian. That was off a Reuters machine. And by golly, they were supposed to be up to limit 3 to 5 limits. Well, they were 3 to 5 limits, but it was down. And so that means the market was over, and it's over. Nothing you can do about it. So when you see good news and bad action, that means something. You see bad action and good news, that means something too. So I really believe in that, because it's all buyers and sellers, folks. And that's what we're doing here as we're watching these things today, is you got to respect that. And read that book, Reminiscences of a Stock Operator by Edwin Lefevre. Pay you many dividends. I've read the book at least 50 or 60 times. I'm in the midst of reading it again. But after what happened last night, watching that stuff, I said, I've got to, impart some of this knowledge that I've learned over the years, and pay attention to bad news, good action, and good action, bad news. Those are things that are just absolutely very, very important, because once the buying is over, they go down, and once the selling is over, they go up. So we're going to take a little break here now, pay a few bills, and we'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the Dow Jones Industrial Average. This is an hourly chart going back over the last 10 days. And as you can see here, all of these corrections have only been 38% retracements. That's all they've been, except for last night. And that is, we made a 50% retracement, and that's all we could make. And that was only like 300 Dow points. This is when the NASDAQ is down 100 and the S&P is down 100 handles from its high, and yet the Dow Jones cannot break. And, the Dow Jones, even though it's only 30 stocks, people watch it and people trade it. And so you have to respect that. And I went to bed and I said, this thing is just not acting as bearish as it should, because it should have had a key reversal and drop at least 600 or 700 points. We are only 250 to 300 points off the high. I was saying, I said, this thing just doesn't look that bearish. And then this morning, when I got up around 4 o'clock, it was still down, but it was now trading. The S&P was now trading above the 38 level after getting down as low as 37.62, happened to be the exact 50% retracement. I was saying, gee, it just didn't look at it. Then when I looked at that Apple stock, I said, oh boy. And by then I had been stopped out of the E-mini position at 38.30, and we sold it at 38.61, and we made a little bit of money off of it, but my goodness, the thing just took off like a rocket. And there's nothing else you can do to stand in front of that, because you just don't know when these things are going to move. This is what we were watching yesterday, folks. This is incredibly important from my perspective as a Fibonacci summation number trader, and that is, if we take a look here, this is the E-mini S&P as we're looking at it pretty closely. About 2 hours. It was about 2 hours before the opening today. You can see where we're setting right down there at that 50% retracement of that level right here. And the other thing, folks, this correction right here that we had right here, that little 2-3 day correction, that was exactly what was happening last night. These were equal. And I said, gee, with all that bearish news, why can't it get below that number? It couldn't get below the number. And the Dow Jones couldn't get below the 50% of the previous swing. I said, gee, this is not acting very bullish. But by then I was asleep and the market took off and away it went. So that's neither here nor there. Not to worry. Be plenty of opportunities. And that doesn't mean anything, because if we don't close above 39.02 today, or 30, I think it's 39.17. Excuse me, 39.17 is the number we're looking at in the S&P as far as the spot to the major ABCD pattern. The Dow doesn't count from my perspective, folks, because it's only 30 stocks, and because they're heavily weighted, because of their price weighted instead of cap weighted, that really skews the distribution. So you got to look at the Dow Jones as just a rough idea, whereas the E-mini S&P and also the NASDAQ are a better idea. Even the Russell's a better idea than that. The Dow's the least of the four indices that are traded. Number one's the S&P, number two's the Russell, number three's the NASDAQ, and number four is the Dow Jones, and that's based on the open interest. But getting back to that, I wanted to show you another thing that I was watching this morning when I came in is the forecast that I was looking for. Hopefully looking to see what was going to happen was the forecast of what the E-mini S&P is supposed to be doing. And if that's the case, it should be topping sometime around the time I'm on the program here. And if it gets above that 39.20 level, this thing can go a whole lot higher. Remember, folks, it's a market of stocks, not a stock market. So these things can go, and they can go a lot faster, especially we're in a short-term bullish rally, folks. We've come off of that October 4th low, and as Larry Williams pointed out, that may be the low. And that is something you got to pay attention to. When markets are not responding to bad news, and God, there's a lot of it out there today, you got to respect that. Very, very important. Now, we had a caller that called in this past week, and he was stuck in a position on Goldman Sachs. And I hope he's listening. I believe he's down there in St. Petersburg, Florida. And so I'm going to bring this chart of Goldman Sachs up, because we are at a very critical level here in Goldman Sachs, just like we are in so many other things. But you'll see here is the area here. If we get above this level here, which is we're trading at 340 right now, we get above 344, we could go all the way up here. The problem that he has here, folks, is he's in options, and they're basically pretty much worthless right here. But he's got 4 weeks to go. So even though they're worthless, he still has that time premium on his hand. And as long as they don't close this stock above 344, it's trading at 340.5 right now. I just checked it a few minutes ago. He still has a chance, because there's only 2.5 hours left to go in the day, and we can easily roll back over. And of course, if it doesn't stays right here, you've got something happening over the weekend, who knows. But the option position basically, he sold them down in here, which was not the right thing to do. It was okay to do it, but he didn't he didn't put risk management into the program, and that's why he's paying the price. And I'm sure he won't do it again. Well, if he'll learn after a time, keep doing it. Eventually you keep banging your head on the side of the sidewalk. You can say, it really helps good when I don't bang my head on the side of the sidewalk. And you'll learn that. And that's what trading is all about. It's not the first mistake that kills you, folks. The first mistake teaches you. The second mistake kills. The first mistake was he put the position on and it didn't work. That was the teaching part. The kill part was he didn't do anything about it. And that's where you get into trouble, is when you don't do anything about it. And that's usually the difference between a professional trader and a neophyte trader, is the professional will usually do something about it. So those are some of the things that we're paying attention to today. We'll have Stan Harley up here in about 6 minutes. And I think I wanted to show you this number here in the E-mini S&P, because it was so very important here last night, because we were in this and I'm saying, okay, where we want to be looking to. And I was thinking with being up 100 handles, we sold it right here. And now at this time of the night, it was all the way down here. That was 100 handles. And then it rallied back about 25 handles. No big deal, right? Well, it stayed there for most of the evening, and boom, then it went, and off we've gone to the races. And we take this out and close above that. If we close above 39.20, folks, it's going to be really hard to be bearish in this market right here, because today's the last day at BlackRock. This is the gunfight at the OK Corral today, folks. Started by the Dow Jones Industrial Average and accentuated by the E-mini S&P and also the NASDAQ. So today's action will be the one that will be really interesting to pay close attention to. We're trading at 36.95. That number, write it down, boys and girls. It's 39.20. If we get above 39.20 today, it's going to be really hard to be bearish in the market. We've got Dow Jones making new highs as we speak, just like it's just blazing away. The only other thing in the Dow Jones that does make sense, and I mean, this is why it's so crazy. Get this up here, and we'll take a quick look at it. And it is wild. Let me get up here, say right here, one here. Remember, this is only 30 stocks, and there's really only 5 of those that are really making any difference. But this move that we're having right now is almost exactly equal to the one we had right here going up into that rally into September the 28th. In other words, this rally right there, that rally into that one, is equal to the one from October the 4th to where we are right now. We're setting right up almost exactly at the 78% level. So we'll be right back, boys and girls. Stan Harley, Harley Stock Market Letter.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley of the Harley Stock Market Letter. Stan, are you there?
Hello, Larry. I am indeed.
Are you enjoying this rally, my friend? I think it's giving us a good chance to get short up here.
I am enjoying the rally. I absolutely am. Yes.
Okay. Tell the folks what you're looking at today, Stan.
We got several charts we brought today. I heard your commentary for the first 30 minutes talking about the stock market and how the futures were down last night. And we turn around and your work suggests a high in the very, very short term. I tend to agree with you for my short-term analysis, but I thought the first charts that we take a look at, we'll kind of start with the big picture and narrow it down a little bit. Let me show you what I have under the hood, so to speak.
Okay.
what I have here is a chart of the S&P 500 going back, about 6 years. And as one can see, we had a low in February of 2016. We had a high in 2018, a low in March of 2020, and the most recent low. And doing the number crunching, I find out that we have a perfect 0.382, 0.236, 0.382 Fibonacci ratio. Of course, the sum of those is 1. But when I get a setup like that from significant highs and lows, it tells me that we probably have a significant change in trend at hand. And that's exactly what we saw here in the middle of this month.
Yeah, we certainly, the fact that you were on the air right when that was happening, and it's exactly
we
what
were. You and I
occurred.
think we're on, was it the 14th?
Yes, yeah, it was right there. So it was,
and I thought then, and I'll reinforce what I was saying then, I thought that the 200-week moving average, as you can see on this chart in red, would prove supportive. And thus far it has been, certainly. And we're rallying very strongly today. All right, let's bring this down. Let's look at the daily chart over the last year or so. And this is an update of what I've shared with you in previous talks. What I've done is I've started the analysis from the all-time high in the S&P on January the 4th. And every one of the pivotal highs, every single one without exception, is lined up with a significant Fibonacci ratio, every single one. For example, the high that we saw in mid-August, on August the 16th, that lined up with a 0.618 relationship of the pattern. I put all of these ratios and the dates into a spreadsheet, and then I do some number crunching. It's called regression modeling, which develops a mathematical equation that finds the best fit to all of the data points, and then I project that into the future. The next 2 points of significance. The 0.90983 is the next in the Fibonacci series from where we are right now. That comes to fruition the week of Thanksgiving, right around the 22nd of November. And then the 1.00 function occurs right in the last week of December. So kind of my summary, if you will, I'm looking for the market to, might have a short-term high developing right in here. Could be right as you and I are speaking. Maybe a hesitation in the next week. We have a little Fed meeting going on. But beyond that, I'm looking for a continued move higher into Thanksgiving, and then a pullback into the last week in December. And I'm saying some kind of retest potentially at that point. We'll see. We have plenty of time to talk about that.
Well, that's certainly good. Now, I have a question for one of our listeners, and that is that, you look at these 200-day moving averages, that red line on your charts, both up and down. And is it because people are aware of it, or what? Why does it hit these numbers? I mean, it's a very, I know 50, 100, and 200-day moving averages, but you watch them hit those numbers, not all the time. They're like Fibonacci doesn't work all the time. But Is it because so many people are using them, Stan? Is that the reason?
No, I don't think so.
Okay, curious.
I think the vast, vast majority of the people who trade the markets, including mega billion-dollar money managers, don't employ the technical tools that you and I and other guests on your program talk about. They don't. They are by far and away fundamentalists. They look at corporate earnings. They look at balance sheets. They look at all the fundamental things about companies, and then from that they say, therefore, the stock shall go higher or lower, depending on the best case. But no, I see why the viewer thought perhaps a lot of people might be looking at this and trade on it, but the reality is no, they don't.
Okay, fair enough. Okay, please continue.
Sure. Here's a same chart of the S&P, but what I've done here is I have noted all of the important pivotal highs, and they are separated by the same number, 47. That's part of the Lucas number series that I've discussed a lot on the air with you. The Lucas numbers, Larry, I find are even more powerful than Fibonacci numbers in terms of defining high to high and low to low sequences. Something that not too many folks are that aware of. A lot of technicians are aware of Fibonacci relationships, But in my experience, very, very few are even know who Lucas was. But I find these to be exceptionally powerful. And, you know, it's not exactly 47 days. It's 47 plus or minus 2 to 4 time units left or right. Yeah. The most recent one occurred right at the bottom on October 13th. And if you add about 47 to maybe as much as 51 trading days, you get to the last day of the month in December. This was marking a high-to-high sequence until October 13th. Yeah. Then it started marking a low, and then approximately 47 days later, I'm looking for another low. And I think that might be a more significant low than what we have just seen. Not necessarily a lower price, but an orthodox, what I'm calling an orthodox cycle bottom or a retest bottom.
Stan, when you're working with Lucas numbers, and by the way, you're the only person that I know that I talked to Peter Leides at Linked about it, and he said he tried it, he said, but he stuck with Fibonacci numbers, and I'm pretty much the same way, but you make yours work good. The question that I'm having is, like with Fibonacci numbers, you know, sometimes it'll be 34, sometimes it'll be 21. Is that the same thing like with Lucas numbers? Like if your Lucas number is 47 and you added like 1.27, it might go out to like 52 to make an expansion type move? Or have you ever looked at that?
Oh, absolutely. And so what I do is I plug these data points into a spreadsheet and then do the regression analysis, the statistical analysis, and that produces the best fit and then tells me what the historical variance has been in terms of timing.
Yeah, so you're looking for a cluster then, where all these things come.
And then that's exactly, and to take it a step further, yes, I look for a clustering from past highs and lows. And if I find a clustering that produces a series of numbers within 2, 3, possibly 4 time units, that heightens the potential, not the certainty, but the potential for a trend change. And then I look at indicators that measure some degree of overbought, oversold, and that gives me a sense, okay, I'm looking for a high here, or for the potential for a low here. And sometimes it doesn't work. Sometimes in a strongly trending move, either on the way up or the way down, a market will just slice right through those Lucas numbers or Fibonacci numbers. And, you know, that's trading, Larry.
Amen to that. I've been there many, many times. And, you know, I hope to be there quite a few more times in my trading life, because I know that that's what happens when you're wrong, for sure.
But do we have time for another chart? Or
we've got more time. We gotta pay a few bills here. Stay with us, Stan. Stan Harley, folks, the Harley Stock Market Letter. He'll be right back with us.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're back and we're talking with Stan Harley, the Harley Stock Market Letter. Stan, please continue.
Absolutely. This next chart is, again, of the S&P 500. And what this reflects is a high-to-high sequence, another Lucas number, the number 18. Lucas numbers are 11, 18, 29, 47, 76, 123. Well, the last one we looked at was 47 trading days. This one is 18. And look how well this has defined the highs over the last many moons here. Sometimes it's a couple of days left or right. It might be 16, it might be 19 or 20, but nominally it's right at Lucas 18 trading days. Assuming the pattern continues, there's an 18-day trading high due right in the present time frame. And then there's another one due approximately 18 trading days later, which is the week of Thanksgiving, which I think is going to be an more important high, higher than where we are right now. So what I do is I try to keep track of these. I try to stay ahead of the game as well as I can. And like you, I'm a trader, I'm a money manager, and I want to just keep my charts updated and try to stay on top of these things. Last chart. Oh, do you have something you were going to say?
No, I just think you mentioned the fact that, you know, you believe in these numbers, but they don't work part of the time. And people have to realize, you know, all the guests that we have on here, I mean, there's nobody that's 100%. And, you know, people start thinking that the person's got the Holy Grail. You better start saving your coupons because you're going to need them to eat. The Holy Grail is between your ears, and very few people have ever achieved it, that's for sure.
Earlier you were talking in the session about your trading of soybeans, and many years ago. Yep. You know, sometimes we have hero trades, and sometimes they don't work out. That's right. I mean, and you drive it home exceptionally well. You have to do the analysis, yes, but you also have to manage the risk. Yeah. It's the combination of both that makes the successful trader.
Yeah, that's the one thing that 60 years experience has taught me. You know, you got to be ready for anything. Like Mark Douglas used to say, anything can happen, and it usually does. So you have to be careful. I would echo that. Now, the next one is a Case-Shiller National Price Index for homes, correct?
Yes. Not stock market related, of course, but something that most of our viewers probably have a very strong interest in, and that is home prices. You know, it gets discussed on the air all the time. I download the Case-Shiller data. Comes out the last Tuesday of every month. This was just published just a couple of days ago. Dumped it in a spreadsheet, plot it. I found a distinct 64-month cycle in the data series. You can see we are turning down from a couple of months ago. So the work to me says that the analysis says to me that home prices have probably peaked for the current cycle. And typically we go down for about 64 months, which is a little over about 5 1/3 years. So that's suggesting we're down into, latter part of 2027. for a low. That's the last decline from September of 06 into early 2012, went down exactly 64 months.
Yeah.
I expect this next decline to do something similar.
Okay. Now, Stan, I have a question about real estate because without doubt, I am the absolute worst Stan, you know Westlake Village, right?
Oh, yes.
You know the corner of Westlake Boulevard and Thousand Oaks Boulevard, there's a huge mall complex there now?
Yes.
Do you know that I owned that property in 1974? I paid $50,000 with it. Three of us went together. It was $150,000, and we held it for 9 years. We ended up making like $6,000 or $7,000 on it. I mean, I'm almost embarrassed when I go by the place. I think what it must be worth now, just if I'd have taken leases and stuff like that on, because, you know, it's got 2 movie theaters, a half a dozen restaurants. I mean, it's just. I look back and I say, my God, what am I doing wrong in life?
I know that area. That's it for the people who are not from Southern California. That's in Southern California, northwest of LA.
Yeah, it's right on the border of Ventura and Los Angeles County, County, of course. But anyway, please continue. Sorry to hold it back there.
Yeah, those are all the charts I brought today.
Okay.
I don't know if we have any questions.
We have one other question, and that is when you're doing the clustering. The question is how do you determine whether it's a cluster? Is in your computer program that says, look, there's a whole bunch of dates coming up at this time? How does that work?
Good question. I keep spreadsheets plural of multiple time frames, yearly, monthly, weekly, daily. And I even track 30-minute data. And so I will do projections using all of those time frames from highs to lows, highs to highs, lows to lows, lows to highs, and see if a clustering develops. And I try to keep my charts done well ahead of time so I have an idea of when to expect the potential for a trend change. And it's a constant evolutionary, revisionary process.
Wow, that's good. Hey, listen, thanks for being with us, my friend, and we're going to have you on again soon. And keep up the good work. Stay on the green side of the grass and live every day like it's your last, because you don't know when that last day's coming. That's what my grandpa used to tell me. Hey, Stan, thank you very much for joining us, buddy. We really do appreciate it.
My pleasure.
You bet. Okay, folks, Stan Harley. There's a really stand-up guy if you ever want to meet one. It's the Harley Stock Market Letter. Now, we got to take a little break here, but before we get to that break, I want to show you folks what I'm looking at right now, because we are in the teeth of the whale, as they say, as Jonah would say. Let's get this up here and take a quick look at it. I'm watching the E-mini S&P 500. This is the one where they do the most trading, of course. And here's where we are. This is a daily. And as you can see here, as we're looking at this, what we're doing here is we're making our very first A, B, C, D, and we are setting at the 50% retracement of the high that we made way back here in September the 28th, okay? And we're also setting, at the 382 of that high way back in January, so you got to pay really close attention to it. This is an A, B, C, D. Now, the key number here, we're trading, my beeper just went off just a second ago at 3,900. The old high was 3897 or no 3902, I believe. And so the key is if it closes above 3920 today, and it could, because you got 2 hours to go. Anybody that sells it up in here, you got to have a hope and a prayer, because you're so far above the opening price. Bullish news or bearish news, bullish action. So many things saying Friday in an up week. Hello, operator. You got to be nuts to sell it here. Not only that, but you're coming into the last days of the month, and those are the most positive, because people start putting their money into the from their 401ks and stuff. So a lot of reasons saying this thing going to go reverse today, but Monday it might. You don't know. But this is going to be really key for me, because that is an ABCD. On page 222 of Gartley's book, he said, boys and girls, when you see that first ABCD in a bear market, you sell it. You see that first ABCD in a bear market, buy it. And by golly, he's been pretty right along the way. But this is a Gartley sitting right here. Last trade I saw was at the beeper was going off at 3,900. I just got an update, 38.99. Hey, we're going to take a little break here. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted a chart. Thank God we got so many people listening here that correct me when I'm wrong. This is actually the second ABCD pattern. We had another one back in here into that September 28th high. You'll notice it was not as clear. This is a perfect ABCD that we're looking at right here. This one, the CD leg went crazy to the upside up to the 61% retracement, but we're setting at a major, major level here. The actual 382 on this whole move coming down from that August high comes in. The 382 on that is at 39.30. So that's why I'm saying 39.20 is really important. But 39.30 is the exact 382 retracement of that. This is a rally in a bear market. It's a big one, but by golly, that's really what it is. If this is the start of a new bull market down there on October the 13th, I will have to say put that old white flag And little old Johnny in the back of the room's waving his white flag. Okay, Johnny, I got you. Anyway, but that's the way it is. It'll be plenty of opportunities in between. If you're still short, the gold's working great. It's got a $30-some profit in it from a short we put on yesterday, and that seems to be working okay. The bonds had a nice rally, went exactly where they should have, backed off a little bit. As long as they don't get above that 123 level in the December, we should have a 2 or 3 day correction in the Treasury bonds because we went up 5 points. And the dollar index, don't give it up yet, folks. It's still got a chance. We're having a pretty strong rally these last few days in these currencies, but that's all it is, a little counter trend rally. So, live every day in an attitude of gratitude, and may God bless. And next week, I believe we have as our guest, if I'm not mistaken, I believe we're going to have Peter Elides as one of our guests, and also Shut the Front Door and Raise the Rent. I can't remember the other one. I'll have to get it. See you on the flip side, folks. Have a wonderful weekend.